Welcome to Almeric channel. Well, today is the day third for the accounts coaching. On the first day, you might hope you watch my video. On the first video, introduction of the accounting, and on the second video, introduction of the chart of accounts, how to create the chart of accounts, etc. etc. Now we will go to third. Today's date is for assets. As in the chart of accounts, it shows assets, liabilities, equity, and the final ownership only, and the revenue. These are the five things which it should be in chart of accounts, as I mentioned in my second video. Now, first we will go accordingly, step by step. First, assets. What is mean by asset, and what is mean by liability? Asset is something which is in our hand, like current assets, fixed assets, and liability is which we have to pay to, for example, like vendors and bankers and shareholders' equities, whatever it may be. That is called liability. So now first we will go. Today's lesson is on types of assets. Under assets, what is the types of assets? Clarifications, details. Under type of assets, there is three main categories. That is convertibility, physical existence, usage. So under convertibility, there is another sub accounts is called current assets, fixed assets. And second, under main physical existence, tangible assets, intangible assets. And third, usage. Under usage, operating assets and non-operating assets. So now, first we will go today only on convertibility. And tomorrow, physical existence, and day after tomorrow, usage. Under types of assets. So now, we will go under first convertibility. Under convertibility, there is two current assets and fixed assets. So now first I will explain you what is the current assets. Why we call it is called current. Current means present, now, at present what we have. Like in our hand there is something cash, in our bank there is something in bank and cashes, or inventory, that is goods which is in our warehouse, which is in our under control. This is all under assets will become. The current assets account is a balance sheet line item listed under the assets section, which accounts for all company owned assets that can be converted to cash within 1 year. Assets whose values is recorded in the current assets accounts are considered current assets. Current assets including cash, receivable, stock, inventory, marketable securities, prepaid liabilities, and other liquid assets. Current assets may also be called current accounts. So now key takeaways. We look how the key takeaways for the current assets. Current asset is an account listed on a balance sheet that shows the value of assets owned by the company that can be converted to a cash through liquidation, use, or sales within 1 year. For example, in each year closing year, we will show our report to our management that this is the balance sheet, this is what we have in our company. Like for current assets, this is we have cash, this is in the bank, and this is our inventory, and this is so and so whatever we have accordingly. So according to the management will decide what to do in future based only upon our report of finance, chief financial officer. So in that case, we have to prepare every year a proper and good and honest balance sheet, profit and loss, trial balance to issue to our management so they can decide accordingly. So this is very very key important thing to understand why account system is very necessary for management purposes. So now, okay, we'll go back again. Current assets. Current assets account is important because it demonstrates a company's short-term liquidity and ability to pay its short-term obligations. Sometimes if we have a overflow cash in our company, sometimes we have to pay liabilities which should be covered accordingly. So the management will decide, okay, we will pay this so and so amount for the liability which is under balance sheet is showing. So they will decide, okay, for example, if we have 1 million in cash in bank and liability is, for example, we assume 80 lakhs. So management will think what we will do in the management. So we will clear 80 lakhs from 1 million to pay our liabilities, vendors, shareholder equities, and this and that, whatever it may be, according to pay to our liabilities. So this is the decision which our owners will look and finance officer will look to take a decision to give a management that what should we do. So this is the current assets. All the assets of a company that are expected to be conveniently sold, consumed, used, or exhausted through standard business operation within 1 year, every year. So, publicity owned company must adhere to generally accepting accounting principles and reporting procedures. Following these principles and practices, financial statement must be generated with specific line items that create transparency of interest parties. One of the statements is the balance sheet, which lists a company assets, liabilities, and shareholder equity. Current assets is always the first account listed in a company balance sheet under the assets section. It is comprised of sub accounts that make up the current assets. For example, one Apple Inc. company listed several sub accounts under current assets that company to make up total current assets, which is the value of all current assets and sub accounts. So this is the way. So the current assets is usually very very important for in balance sheet to be shown. Now go to second point of the type of current assets. What is the types of current assets? Many assets can be considered current by different businesses throughout all the industries. In general, most industries group their current assets into the sub accounts. However, you might see others like cash equivalents, marketable securities, account receivable, inventory, prepaid liability expenses, other short term investments, like this. On the balance sheet, the current assets sub accounts are normally displayed in order of current assets liquidity. The assets most easily converted into cash are ranked higher by the finance division or accounting firm that prepared the report. Right? According to the report, the order in which these accounts appear might differ because in business can account for the included assets differently, like cash and cash equivalent, marketable securities, and account receivable. So under the under the current assets, there is also a accounts receivable. What is account receivable? The value of all money due to a company for goods or services delivered or used but not yet paid by customers. Right? Like we have to receive some money from the customers that which is still not paid under invoices what we issued. So that is called receivable accounts. This is also come under current assets in the balance sheet. Current assets, as long as the accounts can be expected to be paid within a year. If a business makes sales by offering longer credit terms to customer, some of the receivable may not be included in the current assets accounts also. sum of account, because sum of accounts have been made through by the constructions, which is not called as an account receivable based upon the working uh, flow. So now inventory. What is inventory? Inventory is usually most used in the like manufacturing companies, big manufacturing, raw materials which is used for the producing the goods, and restaurants, and many big manufacturing industries. They will keep the stock under the warehouse to use for manufacturing the product. That is called a inventory. Inventory, which represents raw materials, components, and finished products, is included in the current asset accounts. Also, this will come under current accounts. So how you will go? You remember from the beginning, how many types of current assets? Types of current assets is cash, equivalent to bank or something. Second is account receivable. Third is marketable securities. Fourth is inventory, and so and so. I will just little bit explain on in this to just introduction what is the current assets. Later on, one by one, after finishing my introducing some basics knowledge, I will go through very deep on the current assets in all the ledgers, in all the subjects. So this is just like a introduction of for the assets and liabilities. That's it. So another also we have many things in current assets, like what are non-current assets, like there is in under current assets there is non-current assets also. Current asset is an assets an account where assets that can be converted into cash within one physical year or operating cycle are entered. But here non-current asset is an account where asset that cannot be quickly converted into a cash, often selling for less than the purchase price are entered. This is a non-current assets. This will be go very deeply through one by one step. What are some examples of current assets? Some basic small examples is which is already have explained, like cash and equity, market securities, account receivable. So later on we will go. There is a more deeply what are 10 current assets, what are types of current assets, the bottom line, so and so. So today is just introduction of the current assets, and tomorrow I will teach you by liabilities. So my dear friends, this is not only just I'm explaining my current assets and I'm going through escaping this subject is finished. No, this is just a introduction of the main base to picturize in your mind what is the account, what is the chart of account, what is the current assets, what is the liabilities, equity, so and so, just to put in your picture. This is the things. Later on, if you go through my previous videos, you will understand one by one, step by step. You will follow my videos, you will understand very clearly, and in future I will explain one by one of each subjects in very deeply and in each a very good manner way, and what it will be used, how many types of current assets, what is the negative and positive things will coming upon when physical we will work on the companies to show our management, so and so. There are many things. You hope you understand. So these are things. So hope you might guys enjoy my introduction of current assets today. So see you tomorrow for the liabilities, and hope have a good day and nice to see you. Thank you very much, and please